The laws around economic nexus and all have really changed the way that even state auditors and state representatives look at a business when it comes to determining whether or not there's nexus. So obviously you always want to do what's right, right? Like you always want to comply with the law, but you have to really work with somebody, something to be able to kind of assist when it comes to sales and use tax, whether it's a software tool. But at the end of the day, like you do need some assistance. And I think a lot of CFOs and CEOs and all your, E-suite business professionals are fully aware that like it's gotten to a point when it comes to like taxes as a whole. You can't just kind of, rely on, your gut. You got to reach out. You got to talk to people. You got to understand like what's going on in the market, how other industries are dealing with it, how your competitors are dealing with it. All of this is important at the end of the day to, help grow your business and remain compliant.
You're listening to Ecom Finance Experts by Finaloop, where we dive into e-commerce finance best practices with the sharpest minds in the game. Joined here today by two friends from Withum. Joining us are Breea Boylan, who is a sales tax supervisor, lead consultant at Withum. She specializes in tech and emerging growth. And by Courtney Easterday, who is a sales tax senior manager at Withum, also with expertise in salt and sales tax and everything related. Thank you for joining us.
Yeah, thank you so much for having us.
Yes. Thanks for having us.
All right, so maybe we'll jump right in and we can kind of circle back afterwards. Now, a lot of times founders kind of don't like dealing with sales tax, don't exactly know how to deal with sales tax. Like, what would you say are maybe the biggest misconceptions that you guys hear when talking about sales tax with founders and brand owners?
I think one of the biggest things is I only sell online. I don't have a sales tax requirement. I'm not physically in the state. And that's like founders haven't gotten fully up to date with the changing changing sales tax laws since Wayfair.
Yeah, and there's been a lot of changes to the law and sometimes there's misconceptions of what those changes actually mean, right? Like one of the big things that we see is when a state rolls back the transaction count. Some founders or some companies that we've worked with have actually found or felt that they have found that that means, well, the transaction doesn't count at all, right? But that's not necessarily true. The law sometimes is a little bit more prospective, right? Than actually retroactive, right? So that is something that we see quite often. In general, too, I think a big one that we're constantly seeing is, well, I'm not taxable, right? Like I'm a service, so I'm not taxable. That's a big one that we hear a lot of. And the laws just have changed so much over the last couple of years. Back prior to Wayfair and 2018, there really wasn't too much sales tax requirements unless you were physically there. So, having to not only adjust for economic nexus, but also like what is actually being sold and the way these laws have been changing over the last couple of years around services. Now that states are sort of kind of trying to catch up, right? We've been seeing some tax laws. Maryland is a perfect example, right, that recently changed. We've been seeing some cities change their laws as well, like Chicago, where either the rates have changed or what is actually being incorporated has been changed. So we've been seeing a lot of differences. And then when we talk about e-commerce businesses, often they sell products, right? But sometimes there's a service element to that too, right? So it's not just as simple as saying, well, I sell, a service. It's not taxable.
Right, all right, that makes sense. Do you think that brands have more awareness about other types of tax? I don't know, franchise tax, corporate, other state taxes and sales tax? Is that like kind of they're still stuck pre-Wayfair as opposed to other areas, or people just kind of don't give any consideration to tax until they get more developed and have more like finance in-house?
I think tax is just the last conversation that most people wanna have, right? Like, in general. Um, and I would say, unless Bria, you disagree, like, I feel like most businesses are a little bit more aware about income tax, maybe not so much franchise tax, but definitely income tax or, the equivalent of. And sales tax kind of always just seems like that last question that anybody wants to ask. We see it a lot in due diligence, right? Where sales tax is becoming one of those factors of what can actually hold up a business from being able to sell. or, what the actual selling price is gonna end up being, right? Or what's gonna be held in escrow. So it's a major player when it comes to companies as a whole, and making sure that you're compliant.
Right, right. That makes sense. You mentioned before the changing of laws and of the threshold for transactions. Maybe you can like walk us back a little bit, give us a little bit of color about Wayfair, what went on after Wayfair, and like what the landscape kind of looks like today. That'd be very helpful.
Yeah, so Wayfair versus South Dakota was the turning point of sales tax for nexus purposes when it comes to economic nexus and how economic nexus replaced the primary standard of physical presence. So states enacted thresholds with being around $100,000 or 200 transactions annually. And if the companies crossed over those thresholds, they now had a sales tax requirement, even if they weren't physically in the state. Where previously physical presence was the main source of nexus in a state, and the economic side wasn't really viewed until Wayfair. Like I said, majority of the states have that 100K in revenue, that can trigger Nexus. However, there is also some states that have 200 transactions that can trigger Nexus, and this is ultimately supposed to find those smaller companies um, to ensure that they're kind of leveling the playing field on a sales tax front. There, we are seeing, as Courtney mentioned, that 200 transaction threshold is starting to go away in some states. They're starting to adjust the laws because they weren't really trying to get companies that only had a handful of transactions. They were really trying to just level the playing field. So we are seeing law changes there that are starting to pop up over the last couple of years.
Got it. And by transactions in that state, it means that the end customer is residing in that state. That's the definition of a transaction per state.
Yeah, so when we look at sales tax, we always look at where the benefit of the service is received or where the product is delivered, right? So when it comes to e-commerce and we have physical, tangible goods, the end customer who's receiving the product, it would be destination source. When it comes to services, that can be a little gray, but generally speaking, where is the person benefiting for that service? And generally speaking, we see it on like an invoice basis for transactions.
Got it. And this is annually, meaning if you're under the threshold, then in theory, per year, even if on an aggregate basis you're over it, you presumably would not have an excess in that state.
Yeah, so it is an annual threshold. However, there are different ways that states can view that, right? So some states view it on a current or preceding calendar year basis. Some states view it on a preceding 12-month, or there's other states that are just a preceding calendar year. The rolling 4 quarters, it depends on the state and it varies across the jurisdictions.
Which makes it fun for companies to track this, right? Uh, That's where it becomes a little bit complicated for everyone. So I know Bree had mentioned like the states were trying to level the playing field, right? But at the same time, it also has added in an additional burden for a lot of taxpayers when it comes to having to track that. There are different tools that are available to be able to track Nexus, and most of them are pretty good, I would say, at keeping up at, the changes in the law, like the rollback of the actual transaction count and whatnot. But at the end of the day, like someone still has to be checking that, right? Somebody still has to go in and see, well, is Shopify tracking my Nexus appropriately? Do I have all of my sales feeding through? So there are different implications when it comes to actually being able to understand what your Nexus footprint is and how you're actually addressing it. Like Rhea mentioned, like not all the states treat it the same. So, you're hopeful that these tools are assisting with that, but they might track and say you have Nexus, but you may not even be taxable in that state. You don't know, right? Like there's always an additional layer when it comes to this compliance matter as a whole.
Also, with that, Courtney brought up a good point of how like states view it differently. Not only do they view the annual basis differently, but they can view what they consider to create nexus differently, right? So some states, all of your sales, right? Your total gross sales, your marketplace, your resale, your wholesale, all of your sales are encompassing to meet that threshold. Where there's some states where they don't consider your wholesale sales or your non-taxable transactions, where other states don't consider your marketplace sales, and that varies by state. So generally, when you look on a conservative basis, you want to include everything just to make sure that you're encompassing any state that you potentially have nexus.
Right, right. I guess it's a pretty big mess altogether. That's my main takeaway from this. And we mentioned like 100 or 200 transactions and like 100K revenue. Obviously, it changes based on states, but correct me if I'm wrong. But some states have it's one or the other, and some states you have both requirements. Correct? I mean, you need to have a certain transaction number plus a certain amount in order to actually have a nexus. Correct?
Yeah, so we like to use the terminology or and. So there's most states that have a transaction threshold still is an or state where you have $100,000 of sales or 200 transactions. There are two remaining states that are and states, which are Connecticut and New York, which means that you have to have both $100,000 of sales and 200 transactions in Connecticut. New York's a little bit different. They're a larger state that they kind of have a higher dollar threshold but lower transaction threshold, which is 500,000 of sales and 100 transactions.
Yeah. All right. All right, now moving on to, where we dealing with e-com brands, people selling online. A lot of them, some are selling purely direct to consumer. A lot of them are selling on various marketplaces. So maybe you can give our listeners like just kind of a brief rundown or breakdown of how it works, what our marketplace facilitator was, what did it actually do for me, and what do I still need to do, even if I am selling purely on the Amazons of the world.
Yeah, so similar to Nexus, marketplace facilitator laws came into effect shortly after, where a marketplace who um, advertises and facilitates the sale as well as collection of payment um, would be considered a marketplace facilitator and required to collect and remit the sales tax on behalf of e-commerce or businesses selling through that marketplace. So the biggest one known, Amazon, right? Amazon now has a sales tax requirement for the sales that they are facilitating on their platform. Um, it ha- Businesses have to kind of be careful with that and understand where marketplace facilitator is reporting the tax and where they are not reporting the tax, right? So understanding the marketplace facilitator's footprint, and what they are managing or what they are not managing. But businesses still have to be aware of where their sales are through a marketplace because that can still constitute them having nexus and counting towards their nexus. And also when they are reporting for sales tax themselves, they do have to still include those sales in reporting generally.
Yeah, and just because you have a marketplace facilitator, collecting and reporting, you might still have to report 0 returns, right? Like, you or 0 tax returns essentially, right? Like, you still might have to report the actual marketplace sales on, like, a completely separate return that is 0 tax to you, but ultimately still part of your requirements. So I think the states are trying to find a way to kind of iron it out and make it a little bit more cohesive for a lot of taxpayers, but I think we're just not quite in that position just yet, right? Like, I think we're still kind of testing the water. You think about Wayfair and it's like, for somebody like Brea and myself, where we work in this every day, like, it's been around forever, right? It's impacted us significantly since 2018. But at the same time, it's still in its infancy, right? When you truly think about like how the states like view marketplace facilitators and truly what their responsibilities are, because hand in hand with sales and use tax, there are other taxes that exist, right? There are other excise taxes that exist. Just an example, like tire tax, right? There are different rules on how that's treated, and the marketplace facilitator rules may not always transfer through those excise tax as well. So like, who's responsible for collecting that? Who's responsible for reporting it? How do you deal with it? And the way that some of those states deal with that as well, it may not be the finance department, may be a completely different department that handles it. There unfortunately just isn't a lot of cohesion. So, whenever a taxpayer is in a position of working with a marketplace facilitator, which at this day and age, especially if you have a product, an e-commerce product, like, it's hard to say that you wouldn't go through an Amazon or pretty much anything, even as a service, right? You can still go through those other resources that are out there like Google and whatnot. So I do think that, it's not it's not always cut and dry. It's not always black and white. It's something that you should work with an advisor for to fully understand like what the implications are for you and who's responsible for those as well.
Right. And kind of just to recap on what you were saying before. So if I have, let's say, $70,000 worth of sales on my marketplace and another $30,000 of sales on D2C, and I'm in an or state, or I'm in an end state and I have enough transactions as well, then in certain states I might meet the threshold. And on the third, because I'm hitting those 30,000 or 30,001, I would hit the economic nexus threshold and be subject to sales tax on that amount as well, correct?
Correct, yeah. Now every case is a little bit different, but at the end of the day, like, overall, yes, like, that could implicate the business to have to start collecting sales tax. And it could be as tiny as, like, 10,000 is my direct to consumer, but I've got 100,000 going through Amazon, right? So, it could really, impact the business significantly. It is important to make sure you're looking at your entire gross sales when we're looking at economic nexus as a whole.
Got it. Are states, I'm sure it depends on the state, but are they like on top of it? Do they know to look at your marketplace sales in Amazon? And I'm not talking about compliance and non-compliance. I'm just trying to understand how things work in practice. And you have your D2C sales. Would they know how to kind of pull those together and say, okay, you have 100K here, but another 10K here, you're subject to our Nexus laws?
Yeah, so they're getting smarter at it for sure.
Okay. Okay.
One of the things that we've kind of been seeing is, I mean, as everybody knows, especially if you're selling like a physical product, you have to get it from point A to point B, right? So it's got to get to your warehouse or it's got to get to wherever you're shipping it out of. And most of the time you're putting it on a truck, or a lot of the time you're putting it on a truck. There are stops for those trucks where they have to weigh in and they have to provide their logs of what products are sitting on their trucks. And states do have access to that information. So they can see that you may be traveling or sending this product into a state like Florida, into a state like Louisiana, wherever it is, right? So they can definitely see the product moving. I think also in general, like just with the kind of, catching up with the age, right? Like everybody's aware that Amazon is a plethora of products that are available. And I don't mean to call out just Amazon. There's plenty of other ones that are out there, right? But nonetheless, like everybody's fully aware of how accessible product is at this point in time. I mean, there's a lot of like, department stores too, like Target, Walmart, that also, kind of sell product, right? Like it's at this point we are so intertwined with each other when it comes to selling products that I think a lot of states are fully aware that there could be other sales. I've actually, not to bring up like horror stories, I've actually had audits where it's been like, well, I saw a review online, right? And like because you put someone's name and the state that they're from, like that's how they knew that they had sales in that state, right? So the laws around, economic nexus and all have really changed the way that even state auditors and state representatives look at a business when it comes to determining whether or not there's nexus. So I think, it's obviously you always wanna do what's right, right? Like, you always wanna comply with the law, but, you have to really work with somebody, something to be able to kind of assist when it comes to sales and use tax, whether it's a software tool, at the end of the day, someone still has to review that. You still need a human there. We're not replacing humans by any means when it comes to, like, enforcing, like, some sort of tool, but at the end of the day, like, you do need some assistance, and I think a lot of CFOs and CEOs and all your, E-suite, business professionals are fully aware that, like, it's gotten to a point when it comes to, like, taxes as a whole that, like, you can't just kind of, rely on, your gut. You gotta reach out. You gotta talk to people. You gotta understand, like, what's going on in the market, how other industries are dealing with it, how your competitors are dealing with it. All of this is important at the end of the day to, help grow your business and remain compliant.
Right, right. Makes a lot of sense. And just one last question before we move on the marketplace facilitators. Are there any states that do not have marketplace facilitator laws and you'd have to fully take care of your sales tax without the marketplace doing so?
There are a handful of states. I think this is changing though, and like I had mentioned earlier, like the marketplace laws, it's like how far do they extend, right? Like Brienne and myself are actually working with a client right now that does have some other excise taxes, and we're trying to figure out like how far does this marketplace extend in this particular state. But there are some states where they just really truly haven't given a great definition of whether the marketplace is actually responsible or whether you as an individual is responsible. So obviously it's a case by case basis, but there are some states that there truly might be an implication for the business where, maybe the marketplace facilitator is not actually handling it or they don't have the requirement to actually handle it. Could be based on what you're selling, could be based on what state you're selling in. So it can become a little bit of a gray area, which, it's great for Bria and myself as professionals in sales and use tax, but it's unfortunate for a lot of businesses. You do have to, make sure you're a part of a community when it comes to understanding what your implications truly are.
Yeah, and just to kind of add to that, I think the biggest thing when it comes on a state by state basis is what is the definition of a marketplace facilitator and a marketplace seller in the state, and at what requirement are they considered the merchant of record, right? And have the sales tax implication versus the actual business that's selling through the marketplace. We see variations. There's some states that are very upfront. Their law is laid out, plain and simple, concise, and then there's states that it's very gray and can kind of be convoluted of what is actually encompassed in the definition.
Got it. Got it. Okay. I guess what is brand's headache is your business, so it works from your end. But yeah, it sounds pretty
I would
complex.
I wouldn't say yours. I think that's the where, like, at least for myself, I don't wanna speak for Bria, like, I'm super passionate about is I hate that it's so complicated, I do. I know it's my business model, but, like, I do hate that it's so complicated, and where I find a lot of pride and joy in what I do is helping businesses get up to date with it, helping businesses understand and be educated and be able to kind of move forward with confidence that they've made an appropriate decision for their business. So, well, yeah, sure. It, is fortunate for us because it is what we do for a living and does keep my bills paid. At the end of the day, like I really do truly enjoy whether it's with me or on their own, like being able to get a business up to date with what they really truly need to be doing.
Right, right. Got it. All right. Let's move on to warehouses. A lot of ecom businesses end up storing their goods, either their own warehouse, a 3PL, some kind of FBA. So how does that impact on Nexus? And like, what does the landscape look like there?
Yes, when it comes to warehouses and inventory, that can constitute physical presence, and those economic nexus laws are kind of out the door. Once you have physical being in a state, then you have nexus for sales tax. We are seeing that when you hold inventory with outsourcing, right, like a 3PL or with Amazon, you may not know where your inventory is being stored. And that can have implications for sales tax without a business even knowing, because their inventory is stored in Amazon warehouse, and a state constitutes that as physical presence, even though they are unaware of where the inventory is sitting. They, like I said, companies can have sales tax nexus without even realizing that they have nexus. And Courtney, are you seeing, what are you seeing with that and how states treat it?
Yeah. So, I mean, generally speaking, there are a handful of states where just having inventory in a state is considered a substantial nexus, right? There are some guidelines that the state does provide of like what is truly substantial nexus outside of economic nexus, right? So like the physical side of things. So there definitely are some states where just having the inventory in the state, whether it's your warehouse or somebody else's warehouse, a marketplace facilitator's warehouse could actually create nexus. So as a business, it becomes a bit hazy in respect of like how you're supposed to track this, right? I do think that there are some marketplace facilitators that are pretty transparent. If you look on their websites or if you look at the guidance that they have available that actually do provide, well, where are their, inventory sitting? Where are their warehouses, right? They could move it without, you really knowing, but at the end of the day, like you are aware, well, it's like these 16 states that are, having warehouses where my product could potentially be. Um, where it becomes really hazy for a business, especially a business that, is still kind of in their startup phase is what's the materiality of this, right? So, is it going to impact them significantly to the point of where they want to, go ahead and be conservative and start registering in those states, even though they don't really know whether or not that marketplace facilitator is going to ship or keep that inventory in that state right off the bat? Or is it something that you want to track, right? And what tools are available to be able to track that is, kind of another piece to this. And, there may be some decisions that are right for one business that maybe aren't right for another business, right? It's always on a case by case basis. But it's a changing world. I think auditors are also very aware of this, and we've actually had it brought up on audits here and there, where they've been like, "Oh yeah, there's a warehouse in Illinois, like one of the more aggressive states," right? So, I do think that it is a something that has to be evaluated for businesses 100%, but I do think that's, a couple things to keep in mind is one, what's your taxability, right? What's the materiality? One of the things that we didn't talk about is there are some states that like don't tax like groceries, right? Like groceries aren't taxable in every state. So you might have a marketplace facilitator with a warehouse in a certain state, but it might not even be taxable in that state to have a concern about it, right? So there are obviously additional factors that need to be considered when it comes to deciding like what's the appropriate step, but it just kind of adds that additional layer of complication of like not only do I need to track where my economic nexus is because I've got all these sales feeding through a marketplace facilitator, but now I have to understand where is their warehouse? Am I taxable in that state? Like who's doing that research and just making that determination, right? So it's unfortunately quite complicated, but I do think that there are, tools and things that are out there, guidance that is out there to be able to help and support.
Got it. And just one last question on this. So if I have a warehouse in a certain state, which isn't even mine, it's through some kind of 3PL, and then I'm selling to a different state where I do have, let's say, economic nexus, then what would my tax exposure even be? Meaning, how much of my revenue or income would be allocated to the physical nexus state versus the economic nexus state? How would that even work?
Yeah, so
So are you
generally speak go ahead, Bria.
sorry, I was gonna say, so your question is if I have inventory sitting in, say, state A, but I have state B that I have next in and I'm shipping this my sales are shipped to state B, what belongs to which state? So generally speaking, we would the sale would be sourced to where it is received. So state B is where it's shipped to, then that would be where the sale would be sourced to. Where state A is just kind of holding the inventory, you would have nexus there. So if sales are shipped to state A, then you could have a sales tax requirement there. But if they're only shipped to different states, then there wouldn't necessarily be a sales tax obligation.
Got it. So if it's just like a holding stage where it's going in between whatever my foreign manufacturer sitting in this warehouse and hitting a final state, then in general, even if I do have physical nexus, if the actual sales are being allocated because of my economic nexus to a third state, that's where I would be liable. I mean, my liability would only hit the physical nexus state if I actually have sales there, even if they're under, let's say, the economic nexus threshold.
Yeah, so you can have physical nexus in a state, but if you're not selling to an end consumer in that state, there might be no implication for sales tax purposes. Now, that's not to say that there aren't other tax implications, but for sales tax.
Correct. Right.
So,
You could have state tax, I guess, or other
yeah,
kinds
or
of tax.
property tax, right? There are a handful of states that actually do tax inventory, right? Or the value of inventory. So like there could be other tax implications.
Got it. Got it. All right. How about like recent trends or any new interesting case law that came out in 2025, early 24 that people in ecom need to know about in order to make sure they're compliant? Anything specific that comes to mind?
I think to kind of loop back to the conversation where we started, one of the biggest things we are seeing is states changing their economic nexus thresholds, whether that be removing the 200 transactions, adjusting it, generally speaking, removing it. We're seeing that a lot in 2024 and 2025. Along with so there I know e-commerce is generally product, but there could be services attached. We are seeing a lot of service laws, like tax laws for the taxability of services changing as states are becoming more in tune with the services that are being provided. For example, Louisiana changed their taxability relating to cloud computing in 2025. So we are seeing states become more in tune with services that can be provided by businesses and adjusting laws accordingly, as well as more specifically defining the laws relating to services.
We're also seeing a couple of rollbacks. So during COVID, there were certain items that were like rolled back in taxes, like just as an example, groceries, right? There were a couple states that had rolled back taxes or offered a reduced rate on certain products and whatnot. We are starting to see some of that rollback where the states are kind of going back up or readjusting those reduced amounts, which is unfortunate. I mean, there may be an adjustment long term, right? Because we're still in a very inflated economy at this point in time, right? But as of right now, we're kind of seeing a little bit more of a rollback where those little bit of lax laws that were provided during COVID are not really being so applicable anymore. But we're also seeing some changes in some states with regards to different tax rates for different products as a whole. So, like Illinois is a perfect example where there are certain products that are actually taxed at like a reduced rate, where other products are actually taxed at like a higher rate, right? So, we are seeing some states kind of issue a little bit more of that. And then like another trend that we're seeing is just the localities. Historically, I don't know, I don't want to say that they weren't aggressive, but I don't think you saw it as much. We're definitely seeing a lot more of the localities, Louisiana, Illinois, they're becoming a little bit more aggressive with not only just their audits, but also just like making sure that businesses are compliant. You see this a lot in Colorado, right? Some of the states where there are some localities that are, what we call home rule, or essentially they collect or and you pay directly to them, as opposed to the state who disperses it, right? We are seeing a little bit more of trying to get on the same page with each other. So like Colorado has like the Soots, or I hope I'm saying that right. I always call it the Soots return, right? Alaska, you're seeing that as well. So there's definitely some changes where, I feel like, well, there are definitely some states that are trying to be a little bit more cohesive with each other and their localities and how to deal with sales tax, but I am seeing some changes just overall in the rates and the increases in the rates or the changes in what actual products fall under what rates and definitions are being a little bit more defined.
Just interesting that almost all the changes you noted are statutory, either on a federal or mainly on state level. Would you
Mhm.
say there are less changes when it comes to like case law and sales tax versus other kinds of tax? I just come from a general tax background, and I just thought that was a
Yeah.
kind of good point.
I don't know. I feel like we're seeing just a lot in general come out in case law. I mean, there's a couple that I don't wanna speak to too much specifics because I don't know all the facts of, like, how the states have determined what they've determined, but there have been a couple shockers that have come out recently in tax law where it was like, "Wow, well, we really thought that that wasn't going to be an issue," and it turns out, like, it does meet that information services definition or something like that, right? So, it's been interesting. I know a big one that we're seeing is digital goods, right? It's a big topic right now that we're seeing from a lot of states, so I think in general, you don't see a lot. So, when we roll back and we talk about like federal tax, like you don't see a lot of reform when it comes to federal tax. It's very rare that you see huge, significant changes. Obviously, we saw one in our day and age, but nonetheless, I do think that the states are a little bit more consistent with their changes in the respective they are trying to catch up. I think during COVID, a lot of states lost revenue big time, right? Not just from, the cuts that they were able to provide to businesses and to individuals, but I think a lot of people moved around. A lot of people changed what they were doing, right? A lot of people left the labor force as a whole, right? So I think the states are identifying the fact that there's a gap in a lot of the budgets, and there's got to be some way that it's handled in order to maintain some of the simple functions that are out there that the states offer. I think that's in part why you see an increase in the audits. To sorry to cut you off, but I think that's in part why you're seeing, like, an increase in the audits. There are some states where, in my opinion, have just been a little bit more aggressive, right? California, Washington, Illinois, New York, New Jersey's up there. We've been seeing Wisconsin, Texas as usual. So, like, there's definitely, at least from my perspective, we're seeing a little bit more aggression when it comes to those audits to kind of recoup some of that loss.
Right, right. That makes sense. That makes sense. Maybe as we kind of head towards a wrap, just if you had like one or two top tips that you'd give to brands, how to stay on top of your sales tax, what should they be doing? What would that be?
Yeah, I think as businesses are starting to grow, monitoring your nexus regularly, whether that be monthly, quarterly, semi-annual, annually, and keeping up with if you're using the software automation, such as a Shopify, a Stripe, keeping up with the sales, and if there's anything being triggered on an economic basis, as well as when you have new people sign up, even though they might be a remote employee, understanding that that is could be physical presence in the state, and monitoring your physical nexus as well, I think is one of the biggest things, of how to stay ahead of sales tax. And with that, automate as when possible. However, don't assume that a software solution is going to cover what a human can catch, right? There can be a breakage in software. So, although yes, automation is key to success, like a successful business footprint and understanding sales tax, making sure that you're also monitoring it and has a human touch to it is one of the biggest things because we've seen softwares break and the company not realize until they get audited and all of a sudden it comes out in an audit that they didn't realize there was a breakage in in their software. Um,
Yeah.
and
I
I
think
think with that, sorry,
no,
I was
go
gonna
ahead.
say I think with that, making sure you have a tax advisor along the way, to kind of put you in the right direction, understand one who understands tax law, and the kind of ever changing sales tax footprint
Yeah.
and being.
Yeah, I was gonna add to that. So I think my tip is the biggest thing is ask questions, right? Educate your salespeople, educate your tax team, educate yourself. You always hear the statement of like, standing in a room full of people smarter than you, right? And it's not that anybody is not smart, but at the end of the day, like, as a CFO or as a CEO, you're probably not, highly focused in sales and use tax or other taxes, right? So if you partner with a CPA or you partner with any type of like automated system, whether it's a third party software, whatever it is, you can get a little bit additional education there that you can disperse to your team that in the long term is going to significantly benefit the team, right? There are state training sessions that are released. Some are free, some aren't, right? But I always encourage even our team members to join those because there could be changes that are provided in that guidance that's provided by the state. There's courses that are released from, our firm as well as like Big Four, right? That provide some additional guidance. So the biggest thing that I could say is educate and ask questions, right? That's the only way that you're going to be able to handle it. That's the only way that you're going to get through it. And everybody can get through it, but you got to start asking those questions.
Yeah, yeah. Got it. Okay, that's really solid advice. And just for any of our listeners out there who want to consume more of this kind of content or learn more about Withum, what's the best way for them to do so?
Yeah. So we actually have it's called Dash of Salt. It's a in real time release of updates for state and local tax matters, both income tax, franchise tax, as well as sales and use tax. So highly advise you take a jump over to that website and just check it out. You can actually sign up and get those updates directly to your email. We do it on a weekly basis. And every single one of our team members are involved with that, right? So it's highly diverse and the information that will be dispersed there. And then just in general, we with them as a whole, we have an entire sales and use tax team. We have an entire state and local team. Like this is what we all clearly enjoy talking about. We could talk about this all day. So we're always happy to have a conversation and understand the needs of each individual businesses.
All right, great. Well, thank you so much. It's been a lot of fun. And
Yeah.
take care.
Thank you for having us.
Thank you.